Hey, welcome to the Streetwise Education. Today, I'm going to go through the market condition for February 2021. Now, before you go further, please read the following. The legal disclaimer. Now, as you know, Streetwise Education is an educational company. We only provide educational material for that purpose. So if you find this information interesting, please do not use it as a financial advice. Do seek professional, independent financial advice before making any decision, and also to do your own research. Now, so let's move forward. Now, Australian business confidence from April 2020 to January 2021 was pretty negative, as you can see. In April, in late March last year, we're minus 66, and as the pandemic continued, it got a bit worse, and then it got improved as the time gone back. Since the market opened back up from different states, the numbers actually got a bit better. Now, it's nowhere near before 2019, and we're in February at the moment, and in Melbourne, there is a 5-day lockdown, and a lot of business is suffering. So business confidence is again been affected. Now, as been said, this thing could continue until everyone is vaccinated, and so there are chances that the market will continue to could coast down again. So, but it depends on what's happening with the contact tracing and so forth. So, for business in Australia, we are suffering. So, just be mindful of those things. Now, the other thing I want to talk to you guys about too is the GDP, consumption, investment, and incomes and savings. So, once we can get into it, and then we can just go. Okay, go. Just click on the account, national account, as you can see. And go for those things very quickly. Now, this is from Australian Bureau of Statistics. As you can see, the Australian national account. Now, there are a couple of things. The overall economy rose by 3.3%. With the season adjusted, the GDP has fallen to 3.8, and in terms of trade, we just rose by 0.7. Now, mostly because the trade issues with China. So, who is our biggest trading partner? So there's still ongoing tensions, and also household savings has decreased from 21% to 18.9% because people start spending. So there are a couple of things. Now I just want to go for a couple of quick things with you. Looking at the September details, as you can see, in last September we were minus 3.8, and productivity wasn't very good. It's only 3.2. Prices have dropped, of course, and also current price measured back in September last year was minus 3.9. So things is not that good now. But since then, we did better. In September last year, rose to 3.3 overall. It's not too bad, as you can see. Private demand drove the rise because of people require certain goods and services. But overall, it's been pretty negative if you can look at it. Household spending recovered a little bit. As you can see, since September, it got a lot more better. Now, a couple of things with consumption. Since the pandemic, it actually dropped quite significantly, and it's only later September 2000 it picked up. So as you can see the graph here. Now, Melbourne lockdown is quite restrictive if you think about it to the Victorian economy. As you can see, this is the numbers. So we actually dropped negative 16%, while all the others, they actually did much better. So this is quite concerning things. If you're in Melbourne, business is not doing too well, and hopefully today we will get out from the tonight. We will get out from the another 5-day lockdown, so that will help to push the Melbourne spending a bit better, in our state. Overall, household savings ratio is still very high because people save because they don't know what's going on in the market space, and this will continue to be a big thing in the next couple months. Now, a couple things with the market condition I would have to say is that the job seeker and job keeper will come to an end in March. Now, there is potentials that the market will not be able to sustain it, so there is a chance that the stock market will drop, so which I will come into later, talk about the market forecast for February, but there are a chance of that happening. So do your research, and manage your risk, really. That's the only way. 2021, if you saw my other YouTube videos talking about the opportunity in market, it's about being flexible, being agile, and also take opportunity, really go for it. You got to be ready. So, that's something I can't teach you. So you need to be ready for it. So overall, the market is challenging until we open up, really open up, and the economy, the overall international economy open back up, and we can see there will be some sort of growth. But at the moment, February is still quite negative. We just went through Chinese New Year, and the Valentine's Day in Melbourne, we were shut down, so there were a lot of movement with commerce. So that's quite concerning things. But option in Melbourne has gone, clearance was about 80 to 90%, so pretty high anyway. So let's back to the our market condition. Now I do have a gift for you guys. So we done our birthday, but it's early Chinese New Year, so there are a couple of things. There is a getting started in the stock market for the millennial course is $129. Now, if you sign up for it, I'll give you a couple of different bonuses. The first one is 40 minutes quarterly webinar that is updated every quarterly for $4.99. So that's for you. We do this every quarterly. Also, I'll give you a stock market infographics that is valued at $97. And also a bi-monthly macro market video updates, and that is valued at $599. The total package is $1,195. You can actually pick all this up for $129. So go to our website, have a look. This is a really good course. We sold 500-600 copies of those already, and it's a good course, simple for someone to get started in the marketplace. It's not too complicated, and you get a lot of value. I've been trading for 20 odd years. If I had those courses, this one, like the getting started in the millennia, it would have saved me a lot of heartaches. Now, don't forget, like, share, and subscribe.